Here as the Chief Executive Officer of Treasury Consulting LLP, and today we will be covering a very technical topic, which is Banks Asset and Liabilities Committee FRA option. As you very well understand that every bank in this world, whether JP Morgan Chase, Goldman Sachs, Citi, Standard Chartered, Deutsche, UBS, Bank of America, no, just name it, every bank would be having a dedicated asset and liability committee which sits on a periodic basis and which assess whether a relevant bank would have any issues as far as the asset liability management is concerned or not. And one of the very important thing which this committee would have is to manage the immunization. Immunization stands just like a small kid which coming in this world who is prone to the outer environment because he's coming from some other environment. So he is not very conducive to the external environment. So we need to immunize him or her to make sure that he used to conducive, or if there is any negative things which are going, so that he would be or she would be able to make it. Now, asset liability committee do immunization on risk sensitive assets and risk sensitive liabilities, but somehow or not, if you look at the books, then the definition of the both risk sensitivity asset, which is RSA, and the risk sensitivity of liability is all those assets and liabilities which are in the books. But life is not like that. Life is far beyond that. So technically speaking, there are most of the times when banks are in a situation when banks himself do not know whether they are getting that business, and in fact after getting a business they do not know that what would be the regulatory changes that is going to become in that business. In this video, we are going to be covering that cases. Unfortunately, we see that all the decision which Asset and Liability Committee made, which is ALCO, is based upon a strategic foundation. But most of the things are not based upon strategic foundations. Most of the things are linked with something which is not yet come, which is scheduled to come. It will come, it might not come. It will come, it would have two repercussions. One side it would be a good, one side it won't be a good. So this video would talks about that. Herein, we have taken two big banks into consideration who needs no introduction, which is Goldman Sachs and JP Morgan Chase. Top two American banks who I don't think require in any video require any introduction. You name the derivative and they have this in their books. I would say that we should be thankful enough for both JP Morgan Chase and Goldman Sachs who have bought so many derivatives they have published a lot of books also in the public domain, and they are just sharing the wonderful knowledge with us. Now, here we are taking up an example of a reference obligation which is USD LIBOR. The amount is $3 billion. The tenure is 3 months. Counterpart is JP Morgan Chase US. Client is Microsoft. We will stop here. JP Morgan Chase is having a competition with Microsoft. Sorry, with Goldman Sachs. This is Microsoft. Two banks are vying for a business. Microsoft is scheduled to give $3 billion of business either here or here. Now this is a Boolean case, yes or no? As I already told that both JP Morgan Chase and Goldman Sachs need no introduction. So JP Morgan himself know that Goldman Sachs is a much bigger than JP Morgan Chase, and Goldman Sachs also knows that JP Morgan Chase cannot be taken at granted. So they are not a small bank who can be taken at granted. So they would also be very serious that JP Morgan Chase do have a capability, so they cannot be taken at granted. Now what to do? How to do? Again, the issue is that according to JP Morgan Chase, there is a 80% probability that Microsoft would come. MS stands for Microsoft. And there is a 20% probability that it won't come. On the other hand, the problem will get more aggregated when you know that 3 months down the line, when the Federal Reserve would hike the rate. So today we are assuming that we are sitting on the 1st September 2017. Although it is 27th September, but we assume that we are sitting on 1st September 2017, and 3 months down the line, 31st December 2017, in their meeting when Federal Reserve will meet, they will hike the rate. If you are an avid reader or avid watch of Bloomberg TV and international news channel, you would have get to know that yes, they are hiking rate. Federal Reserve is very clear that they are going to hike the rate, and this hike is going to be at least 25 basis point. Of course, the LIBOR would discount that thing and everything would get discounted. and we are heading towards 1.75% regime, which is very good. The situation will be wonderful for US because today on the Bloomberg TV they are discussing about the tax reforms. They are cutting the corporate tax from I think 33, 35, 39% to 20%, which is a wonderful thing Donald Trump is doing. And alongside, if they are going to hike the rate, this would bring approximately $40 trillion in the next decade in US, and that is a wonderful thing. Let me assure you that. But let's move back to topic. Now JP Morgan Chase would have four options. Microsoft come, it won't. Fed would hike, it won't. Now there are four options JP Morgan would have. Now what JP Morgan would have done? JP Morgan Chase would be taking FRA, forward rate agreement. Before moving further, let me explain what forward rate agreement stands at. Forward rate agreement means it's an interest rate derivative which is taken on an exposure which is yet to come. So it's an interest rate derivative which is taken on an exposure which is yet to come. Now this money from Microsoft is yet to come, which is this $3 billion, and this is CASA, current account and saving account. So this is yet to come. But both JP Morgan Chase and Goldman Sachs, although they are the biggest bank, they cannot afford to lose that because the money is big and the name is big, which is Microsoft, largest software company of the globe. So what JP Morgan would have done, JP Morgan would have taken a derivative instrument which is FRA. But if they would have taken FRA, there is the probability that Fed won't hike the rate and they end up in the losses. It might be possible. And what to do? So JP Morgan Chase, ALCO, which is Asset Liability Committee, would be playing a tricky game. In this, they are going to be taking FRA option. But before moving to FRA option, here how JP Morgan Chase would go. Sitting today, when we are talking, 1 year LIBOR is approximately 1.77%. It effectively meant that at the money is currently 1.77%. I have just used a pricer of Reuters, and this pricer suggests that the premium of at the money FRA option is roughly $1,45,000. JP Morgan Chase is ready to pay that money, and JP Morgan Chase is ready to create FRA option because they are expecting that rate would hike. And why they are taking that option? Because if after 3 months when Microsoft would come, then they are going to give a higher rate to him, which is LIBOR. That higher rate would be a pinch for JP Morgan Chase because, like I said, one side they would be very happy, one side they won't. They would be very happy because they are getting a good money, $3 billion in the form of CASA, current account and saving account. And on the other hand, they won't be very happy because it's a LIBOR funding, so the money is flowing out. So had this money come 3 months ago, they would have hedged it. But this money is coming 3 months later, which effectively means that more LIBOR is going to be paid to JP Morgan Chase. So they wanted to hedge that. And how they are going to hedge that? They are going to create a structure like this. One, they are going to create the call option, and then they are going to create a forward rate agreement of 0 into 3. Which means starting today, 3 months down the line, which is 1st September 2017 to 31st December 2017. So now JP Morgan Chase left with 4 options, and the options are, let me just draw it here. So the call option which they are taking is having at the money strike of 1.77%. Because one thing which everybody who is watching this video would be sure about that, if Fed would have hiked the rate, then if the Fed would have hiked the rate, then the LIBOR would have moved up. So if 1 year LIBOR stands at 1.77, and assuming Fed would have hiked the rate by 25 bips, then this would have moved up to at least 2%. It might be more because of the market sentiment, but at least 2% is something which we can take in writing. And that is what they need to pay to Microsoft, and this is what they would like to hedge also. So at the money strike has been taken at 1,77,000. Of course, they have taken a premium of 1,45,000, which they can first capitalize in their books and then they can amortize in their P&L. So first they are going to capitalize it, then they are going to amortize it. Now this is the 4 option. Let me write completely: forward rate agreement. I'm going to write here The strike for forward rate agreement is 1.77%. They are going to be having a buy call and they are going to be having the buy FRA. So there are four options which they have left with. Option number 1, 1, 2, 3, 4. Option number 1 is Microsoft come plus Fed hike. Another is Microsoft do not come plus Fed hike. Another thing is Microsoft do not come, Microsoft come and Fed not hike. Another thing is Microsoft do not come, Fed hike. Another is Microsoft do not come plus Fed no hike. In this scenario, if Microsoft would have come, they would have got 3 billion plus the rate would be 1.50%. The reason is 50% of the people are thinking that Fed would hike the rate and 50% of the people thinking that Fed won't hike the rate. So JP Morgan is not in a situation to take a call. So JP Morgan is going to be playing a diplomatic role in the diplomatic thing, and in this diplomatic they have covered all the four things. Now in this, if Microsoft would have come and Fed would have hiked the rate, they would have got this $3 billion in the form of CASA, and also the rate of interest would have moved to 1.50%. And we very well sure that if the rate of interest would have moved to 1.50%, the LIBOR would have moved up. Here Microsoft came, which is $3 billion, but Fed has not hiked the rate. So which is this dash means Fed has not hiked the rate. Here Microsoft don't come, so this 3 billion is none, but Fed have hiked the rate. Now it is 1.50. Here Microsoft also do not come and Fed would have not hiked the rate. In this, since Microsoft has come, $3 billion has entered into the kitty of JP Morgan Chase for 3 months, and Fed would have hiked the rate. In this, they are going to execute this call option because the LIBOR would have moved up. What is call option? Right to buy. What is call option? Right to buy. You have a right to buy at 1.77. 1 year LIBOR moved up because the Fed have hiked the rate. So you will execute that. So I'll say yes, and the gain would be, I'm writing G, gain would be the fresh LIBOR, assuming this is 2%, minus 1.77%, which is this rate which I'm taking, because we are considering buy forward rate agreement at the money, into 3 billion divided by 1 plus 2% into, since this is 1 year, so this is 365 by 365. So this is this would have no impact. So let me calculate for you. 0.02, 1 minute. So this is 6.9 million divided by 1.02, which is approximately 6.76 million. No, my mistake. This is 91 divided by 365. This is 1.77 divided by 100, and this one plus 0.02 into 3 into 1000 by this is approximately 6.86. 6.86 is something which they will get. If the Microsoft do not come, but the Fed would have hike, Microsoft come, but the Fed have not hiked. There is no point executing the call option. I will write this worthless, and FRA would be worthless. If the Microsoft do not come, but the Fed would have hiked, here the gain would approximately be saying, which is 6.86 million. But the difference between this and this is that in this case, this $6.86 million would be used to $6.86 million would be used to compensate the loss which is coming because of Microsoft, because Microsoft is coming for 1 year, because Microsoft is giving money for 1 year. So this is going to compensate that losses. But here, since Microsoft himself do not come, but the Fed would have hiked the rate, so this is completely a credit side of the P&L. And here, if Microsoft do not come, Fed do not hike, so both are worthless. Now imagine that there are a lot of scenarios when these banks are using when Federal Reserve himself not sure. We could have created a scenario when the Fed would be in a both the sides, like generally which is the dovish side and which is the hawkish side. This scenario would let us know that a top company, a top software company of this globe, Microsoft, would be coming after 3 months with JP Morgan Chase for 1 year. And that 1 year would be a loss for JP Morgan Chase because the LIBOR would have moved up. But JP Morgan Chase himself not sure that the Microsoft would have come or not, because the counterparty is Goldman Sachs is to an extent more powerful than JP Morgan Chase. So there is a 80% probability that it would come, 20% probability that it won't come. And the market himself is further divided that 50-50 that Fed would have hiked the rate or Fed won't hike the rate. Now the point is that many people who have not watched this video, who do not know about forward rate agreement option, would have think that keep it to the Lord, he will decide. No, we have the derivative instruments who will be able to help you to have such kind of positions. Bank Asset and Liability Committee is not all about immunization. It's not all about risk sensitive assets and risk sensitive liabilities which are in the books. It's about those things which are not in the book, and this is what it is all about. So in this, they fired one arrow. The arrow is call option on the FRA, and they would be able to take positions on the 4 things. Position number 1, 2, 3 and 4. This is the beauty of the game. And this is for what Treasury Consulting LLP is here. And we are always ready to help you out. Our fixed income platform is on the way. Next week, we are launching the first look of our fixed income platform. And next year, we are coming to the third largest competitive economy of the globe, which is Singapore. 10th September 2018, you will see Treasury Consulting LLP PT Limited Singapore. In case you have any query, you have any question about the technical trainings, we are providing a lot of training programs. You can come to us. My website, although it's subject to change, but still it is www.treasuryconsulting.in. Mobile is 9899242978. Our Skype ID is Rahul5327. Email is rahul.magan@Treasury Consulting LLP. We hereby thank you very much, and in case you like this video, enjoy your day. Have a wonderful time ahead.